Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Don Durrett from goldstockdata.com. Don, thank you so much for joining us today.
Hey, thanks for having me back, Elijah.
Well, it's great to have you. We had you on last month for a live stream. And after the live stream, we were like, wait, why not have you back on to kind of unpack the election, how the markets reacted? I know we were both kind of, at least I was concerned about a Harris win, but I'm glad it turned out that Trump was able to pull through in a landslide, it seems like, even in the popular vote. So your perspective on that and how the markets reacted here.
Yeah, first on the outcome. Biden got 81 million votes in 2020, plus we had about 10 million immigrants come over the border. So I thought maybe he'd get, 2 million of those. I thought she would easily get 80 million votes. That was my expectation. And Trump, I thought it was going to be difficult for him to overcome that. Trump got about 74 million. So all she had to do was match Biden and she would have won, but she didn't. She didn't even come close. She got 69 million votes, which was 3 million more than Hillary got 2016, but 11 million less than Biden. Where did those 11 million voters go plus the immigrants? It's like she got zero immigrant votes and she lost 11 million Americans. It's weird. So it surprised me. Thought it was going to be a very close race, but I was expecting Harris to win. I thought history was going to repeat. It didn't. Now let's talk about how the markets reacted very positively. And the reason why is because Trump is not going to raise taxes. He's going to cut taxes, especially if he controls the House. If he controls the House, he's definitely going to cut. So he's going to basically support the economy as well as he can. And so stock market's at all-time highs today. It traded at over 6,000 for the first time on the S&P. It traded over 44,000 for the first time in Dow. So we're hitting, the stock market is super excited about, Trump with his pro-business policies coming in, but that creates a lot of confusion for people who follow me for gold and silver. It's like, okay, now what does this mean for gold and silver? Does it mean that, gold is going silver and the miners are going to crash because the economy gets back on its feet? I don't think so. I said I was going to be bullish gold no matter who won, and I'm remain that way. I think that gold will go over $3,000 next year. I do not think that gold's going down. We probably will get a 10% correction at some point, but I see this actually as kind of a blessing for gold and silver investors because everybody was saying that silver was going to break out above 35. A lot of the TA guys said silver's going to break out above 35, and I said not so fast, because in order for silver to get above 35, in my opinion, you're going to need the stock market to roll over. Silver's not going. I just didn't think silver was going to rip, because if silver gets above 35, it's pretty much going to go to 50, because there's very little resistance above 35 if you look at the chart, especially if you get above 36. And so I just didn't see silver ripping to 50 without a decoupling where gold starts outperforming the stock market. And gold did outperform the stock market in September. So somebody were thinking, okay, we're here, we're off to the races, but we didn't actually see it culminate. In fact, gold did not outperform the stock market in October, and it's clearly not outdoing it in November. So we're kind of back behind the 8 ball here, which I think is an opportunity, because when gold and silver finally do break out, it's going to be too late to own these miners. So for me, I want to accumulate as many miners as I can get my hands on before we get above, say, 35 on silver and then 350 on the HUI, the miners index. 350 HUI is kind of a line in the sand for me. If we get above 350 on the HUI, I'm going to stop buying. I won't buy any miners above that level. And my feeling is once we get above that level, we won't come down for 3+ years. I think once we get above 350 on the HUI, we're at 310 today. And so once we get above it, and so now, what does Trump mean? How long are we going to have to wait before silver gets above 35? I do not think we'll get above 35 this year. I think Trump is going to kind of put the kibosh on silver and gold here for the next 2 months as the markets wait to see what Trump is going to do, and then how the economy reacts to his policies. So we're in gold and silver, we're kind of in wait mode. And investors hate that. I don't mind. I think it's a blessing because I'm in buy mode now, but most investors hate it because they're not patient. They just want the market to trend up, right? They hate it. And then they hate the possibility that silver or gold are going to go lower. They don't recognize that if silver and gold goes lower, you have an opportunity to buy stocks on sale. That's opportunity. It's not a bad thing. I've been doing this for so long that I don't worry about corrections. I see corrections as opportunities, but I don't see a breakout above silver 35 this year. I don't see gold going to 2,800. Now gold maybe could get to 2,800. That wouldn't shock me, but I don't, especially in December, because the debt problem hasn't gone away. So we had a $1.9 trillion interest payment. I mean, excuse me, a $1.9 trillion deficit in fiscal 24 for the government. 1.9, and interest was over $1 trillion. That's a problem. In 2025, now we have Biden's budget coming up. Trump won't get to put his budget in for quite a while. Because it starts in October, the budget. So Biden's budget goes all the way until next October. Trump will be able to make some changes, of course, but most of that spending is kind of set in motion before Trump gets into office. So the deficit is going to be above $2 trillion next year. And I think it's going to be 2.4. So that's $200 billion every single month the Treasury has to borrow. The Treasury is going to borrow. These are crazy numbers. I mean, historically, we've never been close to this. In the first quarter of next year, the Treasury is going to borrow $800 billion in a quarter. That's almost $300 billion every month. It's going to put pressure on the bond market, which is going to help put a floor under gold. And the other main point I wanted to make is around the economy, about how difficult it's going to be for Trump to kind of land this plane and get a soft landing. Trump has to deal with the cost of living has outstripped real wages. So the average family cannot pay their bills because their wages have not stayed up, have not kept pace with inflation. And so real wages, I saw a chart where they're basically flat since 2020, real wage growth. So people are getting 3-4% increases, but they're not being able to catch up. And so that's a problem for Trump because 70% of the economy is spending. So how does he fix that consumer problem? So you have a problem in banking where banks are seeing delinquencies in car loans, in credit card debt. They're seeing delinquencies in real estate, in commercial real estate in a big way. So banks are kind of behind the 8 ball here, but the investment banks are making money. The banks are regional banks are having trouble. Banks on Wall Street are doing great, but not so much the regional banks where your small businesses try to get loans and the consumers try to get loans. That's not doing well. Then if you look at housing long-term rates actually went up. The Fed, this is a problem for Trump, the long end of the bond market. And the Fed cut 25 basis points yesterday, and they've cut 75 basis points, and the long-term rates went up. And so that's a problem. Nobody expected that. And so the dollar has went up. It's almost 105. We traded at 105 today, and it backed off to 104.8, but it's basically at 105. That's a problem. The dollar is too strong. Trump wants to get that. He wants a weaker dollar so we can export stuff, make money. And so he wants to get that down to like 100, but that's not going to be easy to do. So there's all these headwinds that Trump has to deal with. So we don't know there's a lot of uncertainty here, but I still am expecting a recession, a hard landing. I just think that Trump has too many problems. It won't be easy for him to fix these problems because inflation, it doesn't go away. If you remember when Reagan came into office in 1980, it took him 2 years to get the economy going. And so just because you have policies that you want to implement, they don't just kick into gear overnight. And I actually think that we're going to roll into a fresh recession in first or second quarter before Trump really can do anything to stop it. I'll stop there.
I definitely have similar concerns there, and a lot of people in the comments here are saying, the debt is the issue, and Trump can't just, wave a magic wand and fix that. It seems to be an issue that has been created over many, many, many years, decades, in fact. So when it comes to these financial issues, I mean, some people have hopes that Elon Musk can reduce the size of government and bring down government spending, but I don't know. I don't. I'm really skeptical about that, and it seems like you are as well. That these are systemic issues that can't just be solved with a magic wand or anything.
Yeah. The problem with cutting spending is when the deficit is so massive that if you cut it at the margin, it really doesn't do any good, and it actually will do more damage than good because he will end up cutting government workers. And I'm almost sure, I think that is exactly, where he thinks the waste is, the main place where the waste is, so if he cuts a lot of government workers, that's been, you know, somewhat of a strength of the economy because the main places that we've been adding jobs is government workers. So now all of a sudden, instead of adding, we're going to lose them. So if the economy is slowing, for instance, non-farm payrolls last month was 12,000 jobs. And if it doesn't perk up a little bit here, and I don't think it will, and then he decides he's going to cut on top of it, um, that's difficult because now he's slowing the economy even further. And then if you have a $2.4 trillion deficit and you only cut 400 billion, that 400 billion, I'm telling you, is going to have a big impact on GDP and the economy because government spending adds to GDP. So, but if you go from 2.4, because here's an important one, Elijah, they cannot cut interest. So interest is already 1.1 trillion next year, 1.2, because prior to inflation, our interest rate was about 3% because we had all these very low rates, right? 1% or less. We're at 3%. Well, today we're at 4%, but the Fed funds rate is at 4.5. So that means that everything that they're borrowing this year will be well above that 3% rate. So they can't cut interest this year, and maybe not in 25, maybe in 26, but not in 25. So he can't cut that. Defense spending will be very difficult to cut significantly. In fact, I don't think that Trump is really going to want to cut defense. It may be 5% in defense, but that's nothing, right? And then you have Medicare and Social Security. He doesn't really want to cut those. And so when you add those up, those are 60% of the budget. So right there. So if he's going to cut that other 40%, even if he cut 10% of that, it's not really going to have a big effect. In fact, it's going to have a negative effect in the short term because it's going to slow GDP. And they're going to be really cognizant of the fact that the economy at that time is probably going to be hanging on by a thread. We're probably going to have GDP less than 1%, somewhere in there. And you don't want to be messing with that because then you can slip into a recession. So it's going to be tough for Elon to do this. Basically what's happened is debt has gotten out of control. We should have never allowed the deficit to get above $1 trillion. We should have never done that. And once it got to 2 trillion, now you have a huge mess on your hand because how in the world do you shrink that back to 1 trillion? How do you shrink those interest payments back down? Here's another thing that's really interesting here is Okay, so we're currently having two, we're paying interest on this massive debt load, right? Well, guess what? We're going to be adding to the debt load. It's right like we're adding $2 trillion to it. We're 36, we're going to go to 38. Well, the larger your balance gets, the more interest you have to pay on it. So we're not hitting the principal. We're not he's just cutting the deficit. He's not cutting the principal. You see the problem? It's a when it gets that massive, um, there's really nothing you can do. I don't know. I personally feel that the U.S. government is basically bankrupt right here, and the only thing that they can do is um, try to kick the can as far down the road as they can before they have to default. Now, the key here is, and the default, in my opinion, is going to be a reset. And what the reset, I think, is going to be, there's lots of different ways they're going to do it, but the bottom line is they're going to have to default on a portion of the debt. They won't default the whole thing, but they'll basically make the bondholders take a haircut. It's going to be really, I think it's going to happen in 27. I'm just guessing, but I'll give Trump 3 years to try to avoid it. But at a certain point, I think they're going to have to do a reset of some type. My feeling is that they're going to they're going to create a new currency. This is where the CBDC comes in. They're going to do away with the current dollars in the United States. The current existing foreign dollars internationally, those will stay in play, but they won't be able to come back in. They'll be orphaned. And then they'll create a new dollar internally in the United States. That's what I'm expecting them to do. And then they'll make the bondholders take a haircut because they basically can't pay them back. But it's going to be, the next 3 years are going to be really interesting. But I don't think that we can afford a default, can avoid a default or avoid some type of a reset. So I'm expecting a new currency to be released this decade, and my target is 27.
I know a lot of people have been calling for some sort of reset, predicting that sort of thing. It really will be interesting to see if it has to do with, a central bank digital currency. I did want to discuss more about precious metals, though, and the reaction that we saw uh, from the election. It seems like obviously we saw this pullback, but based on everything that you're saying, it seems like markets should be reacting very positive, or precious metals should be going higher from here because it doesn't seem like Trump can fix these systemic debt issues. Your perspective on that, why we saw this pullback, and a reminder to all our viewers watching, you can submit questions also for Don in the chat section. But that question in particular, why did we see this pullback this week?
I think part of it has to do with the honeymoon period. So you basically give Trump the benefit of the doubt. We don't know exactly what his policies are going to be. So we give him the benefit of the doubt that he's going to be able to basically figure this out. So you have the combination of a Fed that's cutting rates, that's supportive for Trump, and an administration that's pro-business. So it's kind of the honeymoon period where we basically say, okay, well, we'll let you fix this. We're going to believe you can do it. And it's that feel good. It's the feel good period. So I think we're in the feel good period right now. And I don't know how long it'll last. We'll see if it lasts all the way till January. If it lasts all the way till January, then it could all last all the way through the first quarter. But yeah, I think that's what it really amounts to, is this idea that the Fed's lowering rates and you got an administration that's coming in that's going to cut rates, cut income tax rates, cut corporate rates, and is going to do supportive economic policy. There was already a belief that the Fed could avoid a recession. Wall Street believed that we were not going to get a recession. Now, I think all of this optimism is misplaced because I think the U.S. economy and the U.S. fiscal situation is dire, and nobody's really acknowledging the direness of the situation. I really feel that The next 3 years, 25, 26, and 27, I believe that these next 3 years are going to be the equivalent of 78, 79, 80. Just brutal. Stagflation. You can't get a job. No GDP's negative. Malaise. Just, I don't know when the shoe's going to drop here, but I really feel that we are literally on the precipice of the worst recession that we've had since the late 70s. We haven't really had a bad one since then, but this one's going to be, I feel that this one's going to be really, really nasty because of the debt situation and the difficulty on getting this economy back on its feet once we go down, because the only way that the Fed is really going to be able to get this economy going again is to create inflation. And so it's basically a two-edged sword here on what they can do to restart it. It's very similar to what happened in Japan when they had their bubble pop in '89. They literally could not restart their economy for the whole decade. They had that lost decade. I feel that that's kind of what's coming our way here. And I think the optimism is really misplaced with this optimism with the stock market at 6,000. For instance, the PE right now is, 21, 22, forward, if you look into next year. And that's all based on the economy not getting worse, right? And even if the economy doesn't get worse, that's still a very high multiple. And so, we're kind of going into a storm here, and everybody's very optimistic that everything's fine. And we have I think, a very overpriced stock market based on where we're heading. And we have an inflation problem, we have a debt problem, we have a consumer spending problem, we have a bank problem. We have a lot of problems, but yet the stock market's at an all-time high. And if you listen to Wall Street, everything's fine. But the problem is that the people on Wall Street, they only care about the current month, really the current month and the current week. They really don't look out more than that. It's like, what's happening this month, and will it carry over into the next month? That is as far out as they look. They don't look any further than that. And so they live in a bit of a bubble, and they don't really look at these underlying issues, how they could bite us. Jeffrey Gundlach's probably one of the few people that does, but he's not expecting a recession, which is odd. I mean, even he's not expecting a recession. He thinks that Trump's going to be able to avoid one. But I don't.
No, we've talked about global reset happening, and with respect to the currencies, I mean, there seems to be a lot of shifts happening as well as when Trump, becomes president again. We saw during his term, no major global wars break out, but during Biden's term, it seems like many global wars broke out, and the hope is that those could be reined back in, and those wars could stop. Your perspective on that, and that might be one of the reasons we've seen precious metals rise so much, is geopolitical tension. So how do you see Trump impacting things geopolitically, and do you see that having any downward pressure on precious metals, or will these other financial troubles kind of, as you mentioned, keep precious metals higher?
Well, the geopolitical issues that are helping gold really doesn't have anything to do with these wars, I don't believe. I think it's more economics. Whereas I suppose these wars in Israel and Ukraine are hurting the global economy to a certain extent, but not that much. It's more the oil trade. But they've actually been supporting the oil trade, keeping the oil price up. I think that Trump this is actually one of the factors that's actually pushing gold down, is the fact that I think Trump will end both these wars. And I think he will bring in an era of peace here, era of less conflict. I mean, Trump showed that in the first 4 years. He's not his whole focus on international policy is to avoid conflict and and basically get other countries to do, free trade with us. He's a free trade guy. And so he wants to do that. He wants to focus on trade, not on war. He's not a neocon at all. And I hope he doesn't bring any neocons into his administration. But I heard that the person who's head of his transition team is a neocon. Like, what the heck? I think his name was Wiley. I'm not sure. But yeah, don't, no neocons. Let's go for peace. I think Trump will end these wars, and I think he will usher in peace. And I think that will put downward pressure on oil, which helps the economy. And I think that is helping the stock market. Is the stock market's going, this is great. A peaceful world is good for business, and it's probably going to put downward pressure on oil. It's going to, more drilling, more oil supply. But now, if we look geopolitically, the BRICS has really expanded since Trump left office, 2020. And the BRICS is expanding all the time. And this is a problem for Trump. I think that Trump is actually going to spend more time on international politics because of the BRICS than he would want to. I think he wants to focus domestically, but the BRICS is going to cause a big headache for him because the BRICS want to do trade within themselves and they want to exclude the US. They want to exclude dollars. They want to hurt. They actually want to have like an economic war against the US, and Trump's going to have to deal with that. I think he's going to have a lot more meetings around what the BRICS are doing and how to combat it than he really wants to do. I think the BRICS is a big problem because the BRICS is so big. I mean, you're talking about, a lot of the big countries in Asia, China, India, Pakistan, Vietnam, Indonesia. These countries, they're big. The only one that South Korea and Japan, they're not part of it yet, but I wouldn't be surprised if they try to get in there. But a lot of big countries in Asia, and then that expands to the Middle East, Turkey and Iran, Saudi Arabia. And then you have, I don't think Saudi Arabia has joined. They haven't joined yet. They were supposed to, but I'm pretty sure Turkey and Iran. Then you have all of Africa and you have all of South America. And then possibly Mexico, in Central America. So they call it the global South. Well, as these countries create this economic alliance, that's very negative for the US. And that's something Trump has to deal with. And I actually think that it's kind of the US's Achilles heel. There, and the reason why I say that is that the US is being kind of forced out of the global community to a certain extent. And at a time when this is when the US dollar, slowly and steadily goes down in value as countries don't want to carry as many reserves and no longer buy our bonds. And so who's going to buy them? For instance, foreign ownership of bonds right now has dropped all the way to 22%. It was 30% just a couple of years ago. It's dropped to 22%. They're no longer buying our bonds. That's a big problem. So that means we have to buy 78% of them, or it's like, uh-oh, that's a problem. When you're borrowing $200 billion, when the US government is borrowing $200 billion every single month, where are you going to find those buyers? And so that's a problem. So I don't think the BRICS problem is going away. I think it's going to increase. And the thing that's really nasty about it is that Russia and China have created an alliance, and they've gotten India to join them, and they've gotten, some of these Middle Eastern countries to join them, and that's problematic.
Well, it definitely will be interesting to continue to track this with you. And as Trump, becomes president again, to see the impact on BRICS and also the hopefully bringing more peace to the world would be fantastic. We'll have to leave it with that. But if our viewers are interested in learning more, they can go to goldstockdata.com. Did you want to share with us a bit about that and any last thoughts you had today?
Yeah, so my website, it's not a stock picking service. It's more for people that already have gold and silver mining stocks. So it's more of a data and analysis site. And I do provide a lot of lists, but I really want people to do their own analysis. So I help them out and I give them a lot of leads. But my database has 850 names, and it's been growing lately because whenever the gold price goes up. But yeah, so if you own a gold and silver mining stock, then you want to check it out. And then you can follow, also you can follow me on Twitter at Don Durrett.
And I guess just to wrap up here, yeah, what was that?
I said Twitter, but it's called X.
Yeah, it's definitely. Now, just to wrap up here for our viewers who maybe joined us a little bit late, I know, last time we had you on, we were looking if Trump won to have a melt up, and it seems like we've largely seen that. So it sounds like, though, your analysis is that fundamentally, none of the issues financially have changed, given that Trump will win. But we may see a momentary melt up in the stock market and probably precious metals before a major crash. Can you kind of wrap up for our viewers your final thoughts on that?
Yeah, I think fundamentally things have changed because I don't think the Biden administration was focused on the economy like Trump will be. So fundamentally, that was a big shift. That other than that, no. And so the melt up is basically based on the idea that that difference between administration is going to have an impact and can prevent a recession. So that will allow so basically it says we're going to get a soft landing. So the confidence in the soft landing, it went up. And so since it went up, the stock market is having a heyday. But I don't think the stock market, well, David Hunter thinks it's going to go to 7,000 plus. I don't think it can melt up all the way, for much longer. But I've been waiting, and actually the longer it takes, kind of the better, because the longer it takes, the more stocks you can buy. But I've been waiting for it to roll over. I've been waiting for the recession to arrive. Now, when that happens, it could be weeks or months. But we're basically back in wait mode. But the key to me is I want gold to outperform the stocks. That's the key. Until that scenario unfolds, we're in wait mode and we're accumulation mode. And so, and I'll end it there. But thanks for having me on, Elijah.
Well, thank you so much, Don, for your time. It was great to speak to you today. You have a great weekend and God bless.
Thank you. You too.